Hi everyone, Darren at Leviathan Financial Management with our weekly report on the markets. One of the things that has been taking the headlines this week has been obviously the potential shutdown of the government over the weekend. Also that the Federal Reserve may keep rates on hold for longer than we originally thought. At the moment, as you can see in the chart, we have been still holding above the trend line that we established back in 2020, but we are not far from it. There have been a couple of market participants that are talking about the stock market going down to the 3,500 area or even as low as the 2,750 area. This would also be consistent with the fact that generally, if you look back historically, the markets do not perform well in October. We had the 87 crash that caused, at the time, the Dow to fall the largest amount since 29, and the 2008 financial crisis kicked off around that in mid to late September, ran through October for quite some time after that. So October, generally, you'll find the markets tend to be a bit skittish. I'm sure all of you have got a lot of your 401ks and equities and would be concerned if the market retraced all the way back down to 3,000. So what can you do? There are 2 points to this. Do you want to take a punt and try and make some money out of this possibility of the break, or are you just worried and want to hedge the portfolio that you have? In our system, we can show you what to do. We can use our tools as BB1. Effectively what it is, there's an artificial intelligence tool. This thing covers 1 billion different iterations, looking at all different types of option combinations, calculating the best risk reward, so that you can do a trade knowing how much you have a risk, and therefore it's very easy to calculate what best to do given the position you have and whatever your risk tolerances are. All you have to do here is create a new one. These are months based on product codes. If you are trading equities, it will be just done by the date. If you have any experience trading futures, you'll know that each month has a letter that goes along with it. So we're going to go for the end of the year, which is DECE, which is represented by the letter Z. So we'll go here. You never know exactly when these things will happen, which is why I've gone a little bit further out than October. And I'm not even going to go straight to expiration. A lot of these people that will talk to you about option trades look at option trades based on expiration, which is a very like a 0 or 1 scenario. We look at trades prior to that. Options are very three-dimensional. When you take the lessons, you will see exactly what I mean by that. But for now, we'll keep it simple. So where could the potential targets be? Let's go back to the chart. As that other article that I briefly put up mentioned, the 50% retracement of the 2020 low to this year's high would come in pretty much bang on 3,500. Okay, let's say that's my concern. I think we could go back down to 3,500. What can I do about it? Literally, all you have to do, you picked your day already, type in the number 3,500. That's my target. But again, you're never going to be exact. The market can go down there. It could be 3,500, 3,400, 3,600. The idea is to capture the profit potential within that range. We default generally to 5% around your target price. You can widen that. In this case, I want to make sure that I make money if it goes down. I want to cover myself a little bit higher. I don't want to get to 3,800 and I've lost money on my portfolio and my option position. So now my range that the system is looking at is 3,850, target price 3,500, and even if that goes past it, I'm covered down to 3,325 in the index. So this is the range of the S&P that the system is going to look at. It's going to say, okay, there's your target, that's where you're going to make your most money, but we want to make sure you make something in that entire area. That's what this system will do for you. So all you have to do then is just hit the submit button. There, it's already done. Now, the system will pull out all kinds of different strategies. It will base the list on risk reward. So what we're going to want to do is filter these trades based on your risk tolerance. For those of you not familiar with the markets, all covers everything obviously. Vanilla means something plain and vanilla. It's very easy. It's very basic. You can filter our system down further based on either strategies. Some people have a favorite strategy type. You can filter it for that. You can filter it where if you're wrong, you're going to still make money. You can filter it with where your only risk is premium. But we'll make it nice and easy. We'll just go vanilla. And there the system will pick out some of the best trades. In this case, in this month, in that time frame, the best trade is pulled out as a selection of different put spreads that will give you a return of over 6%. We can click on that. Now, when it calculates this, it also takes into account your costs and slippage, because there's always what's called a bid ask that you have to get past, where you have to pay whatever the price of market is giving you, and there are costs involved, and also when you get out. In this instance, the trade that is picked here is basically put spreads. It's looking at either the one I like here, probably this one here actually. It depends. Also depending on how much money you wish to risk. In this case, this particular trade here, $1.31 when including costs, and the idea is that you would get out of it at $24.42, assuming you're correct. But you're only ever going to be risking that $1.31. We can deep dive into these trades further. One of the ways is running report here. And basically what this report will do is it will give you all the Greeks for the trade, and it will also show you what's called a heat map. It shows you what the P&L of this trade will be over time from now all the way through to expiration. Green is good, red is bad, and the default is staying with volatility unchanged. But we also run heat maps looking at it high volatility and low volatility. So if it was to creep down lower, or if it was just to shank lower very quickly, you can see what your P&L would be. So in this instance, we like, based on risk and reward, that December 35.50, 36 put spread. This is a trade that we recommend to cover that range of 38.50 down to 33.25. This will be getting out of this trade prior to expiration, so there's still value in this trade. Obviously, if you wanted to target something that was closer to an expiration, we can adjust that too. But this is the best trade that we can find, the system found, that will cover your downside in the S&P. It's the best one that we recommend. We'll keep an eye on it and maybe come back to it later in the day, in the year, to see how it has performed.